Welcome to this Skilled MBA Daily Case Study. Today we are looking at a major macroeconomic development. The headline is strong. India's GDP has grown by 8.2% in Q2 of fiscal year 2026. This marks the strongest GDP growth in 6 quarters. In this session, we will break down what this surge means for India's financial ecosystem and why it matters for the global market. India's GDP growth of 8.2% in the second quarter of fiscal year 2026 marks the strongest in 6 quarters, offering vital insights into the financial ecosystem. This growth provides students with practical economic insights, faculty with macrofinance teaching tools, and industrial stakeholders with strategic planning data. It underscores the dynamic nature of India's emerging economy. Before we dive into the numbers, let's understand why this case is critical for our different stakeholders. For students, this is a chance to bridge theory with practice. You will gain insights into real-world economic growth and how financial indicators actually play out in the Indian market. For faculty, this serves as an excellent contemporary example to illustrate macro finance concepts and economic policy impacts in a dynamic emerging economy. For industrial stakeholders, this data is vital for strategic planning. It helps you understand key drivers and anticipate market opportunities within India's rapidly growing economy. India's economic resilience is underpinned by robust domestic consumption, fueling demand across sectors. The manufacturing sector is experiencing a revival, contributing significantly to GDP growth. Additionally, the services sector is expanding rapidly, reinforcing India's status as one of the fastest-growing major economies globally, despite global economic challenges. India's second quarter of fiscal year 2026 performance exceeded expectations with an 8.2% gross domestic product growth, marking the strongest growth over 6 quarters. Key sectors driving this surge include manufacturing, with a notable production increase, construction benefiting from an ongoing infrastructure boom, and financial services, where banking and financial technology are expanding rapidly. Tax revenues are rising, bolstering fiscal strength and enabling infrastructure investments. Corporate profits are improving, fostering a favorable investment climate and capital expenditure expansion. Investor sentiment is climbing, with expectations of increased foreign direct investment and foreign portfolio investment inflows. The Reserve Bank of India may tighten policy if demand-driven inflation surfaces, impacting macroeconomic stability. Equity markets are rallying, driven by growth signals. Large-cap stocks are trading at premium multiples, reflecting high growth expectations. Mid-cap stocks are also seeing increased participation. Manufacturing and banking sectors are leading the gains as markets view gross domestic product growth as a strong indicator of future earnings potential. Credit demand in the banking sector is surging, driven by a retail lending boom in home, auto, and personal loans. Middle-class consumption fuels this demand. Micro, small, and medium enterprises financing is expanding, supported by government schemes. Infrastructure funding for long-term projects is increasing, with public-private partnerships gaining traction. Loan growth often mirrors economic expansion, enhancing bank profitability. Bond yields reflect the growth-inflation balance. Higher inflation expectations and potential Reserve Bank of India rate tightening increase yield pressures, prompting a shift to shorter tenor bonds. Investors must manage interest rate exposure and closely monitor policy signals to navigate duration risk effectively. Gross domestic product serves as a leading indicator, influencing monetary policy through Reserve Bank of India rate decisions. It impacts corporate earnings by shaping profit forecasts and budget planning via fiscal allocations. Investment flows are driven by capital deployment, creating a positive feedback loop where strong gross domestic product growth boosts investment momentum, increases spending, and enhances business optimism, thereby strengthening financial markets. Understanding gross domestic product is crucial for Master of Business Administration students as it links national economics to corporate finance and capital markets. It equips them with essential tools for financial modeling, policy analysis, and strategic decisions. This knowledge aids in interpreting business cycles, anticipating market reactions, and understanding macro drivers of business performance, essential for future leadership roles. India's GDP growth at 8.2% marks a 6-quarter high, indicating strong economic momentum. Key sectors like manufacturing, construction, and financial services are driving this expansion. This growth impacts markets with equity rallies, increased credit demand, and yield curve shifts. Understanding these GDP dynamics is crucial for navigating India's financial landscape and making informed strategic decisions.